Hey, this is Onbring Capital back with another video update. This one is going to be a macro view of Bitcoin because there seems to be a lot of opinion about where we are in the cycle, what it means. Are we going up yet? Is there new lows coming? And I think it's a good time for a lesson about the incredibly slow nature of the markets and how almost all of the emotional energy that is spent wondering about what each individual piece of price action means, or what each weekly candle means, or what each daily breakout means. There's so much emotional energy, in my opinion, wasted wondering about what everything means in that moment. And in my opinion, it's incredibly arrogant to think that you are coming to the chart at the exact time that the market maker is going to do something noteworthy, and that you have this clairvoyance to know that at this moment in the chart, the market maker is going to give effect to the campaign that he has been running and profit from what he is doing. Now, if you have that level of read on all the timeframes of the markets, then good for you. But that is a very hard level, a very high standard of data analysis to reach. And I think it probably does not serve you to think about all of those aspects. We have in front of us on this chart, starting, and now, granted, it was impossible to know at the time. And I'm not saying that this was all preconceived by me in advance. But I think the underlying message that should come off this video is you don't need to preconceive everything in advance. Each aspect that plays out on the chart is very unlikely to be the pinnacle moment where you need to get involved. And it's much more probable that it is part of a wider structure that is being formed and that you do not know about yet. But that if you have that open mind and that flexibility to just observe, then you will see the unfolding of what you need to see unfold. And you will get a sense of when the time is right to act on any given time frame for any given idea. With that introduction out of the way, let's turn to this chart, which uses this indicator, which I coded, which is net volume, which is a proprietary use of price action volume analysis to estimate a net position that was established both on an individual candle basis and on a structural basis by the market maker, singular, who controls the market. And you may disagree with that approach of a single operator of this market, but it doesn't matter because it's helpful to think that way. And it certainly adds value to my analysis to think that it is. You might even want to think it's a single person, one guy at home in his mom's basement on a computer. Obviously, that's not who's controlling the Bitcoin market, but it doesn't matter. A singular operator with a single intention. You waste time and energy, except for at the margins, when you think of competition within these markets. They are, as I've said many times, and I will continue to say many times, they are fully controlled. Fully. There's nothing random about these markets. Fully controlled, at least on a macro basis. At least on a macro basis. I mean, if you go down to the 1 second time frame, yeah, some of this might be random. There might be random elements here that the market maker doesn't necessarily fully control. But on a macro basis, This is all planned, predetermined, and carried out pursuant to a preordained operation. So the central premise of this video is that volume analysis, while incredibly helpful to give a bias and a direction of where price is likely to kind of move toward, simply for liquidity reasons, it's not something that you can look at in a vacuum and see, for example, a big volume spike here at this candle between 25 and 31K and think, okay, the market's bottom, we've got a big volume spike. Or even here, this June 2022 candle, big volume spike. Funnily enough, the same amount of volume. What a coincidence. How are they able to manage that the amount traded on these sell-offs that the market maker is a net buyer of, by the way, because the market maker builds his longs on the way down and builds his shorts on the way up. The exact same amount of volume. Is that the bottom? In theory, this probably could be said to have been the bottom, but it did not mean that price was going to catapult to the moon immediately. No. We had another bit of capitulative volume here, and then it was here, FTX whitebets notwithstanding, that context started to emerge as to what the structure was that they were building. We saw volume spike, volume spike, volume spike within a wider structure, and most notably was the third volume spike, how close in proximity the value area or the key volume area was to the preceding low. That's information. That's information. The information and the information is not that the bottom is in from this candle. I mean, it's not that the bottom is in, or I'm going to go mega long. I've had conversations with people who are lamenting that price is at, or was at least at 25K after bottoming out at 15.4. Oh, I could have made so much money. It's like, how? What were you going to do to buy that low? What was your logic for taking that low? Where was your stop loss? How could you credibly have had any stop loss really here? It's only when structure forms you get an idea of this is what they were doing here. Why would you take price below the low, buy it up at such a close proximity to the previous area, and then bring it back into the accumulation range that you had before? What is the logical story being told there? Is that this was, in Wyckoff parlance, a spring, or basically a stop punt of this entire summer 2022 sideways, summer autumn 2022 sideways, which now clearly was accumulation. Bring it down below that level by very little, smacking the volume such that we have a third volume spike, and then bringing it back in the accumulation range is a clear signal, at least in my opinion, based on the analysis that I give, that this will be seen as a wider accumulation in order to take the money that is at these drawn liquidity levels. And you'll recall in a previous video when we were analyzing the dollar currency index Dixie flowchart that we outlined a scenario that a continued accumulation could happen into 23 while the dollar currency index continued to indicate that money was flowing into fiat. And I'm back to confirm that I do believe that's what we're going to see here. Now, questions still remain as to whether or not that will be a sort of a shorter form. Let me fix these boxes. Whether that will be a kind of a shorter form dip, which is kind of where I'm leaning to right now, so that we get a move back down into these kind of levels here, not to exceed for any real reason, kind of this low here, 17.6. If my idea of accumulation is correct, there's no real reason why, absent like maybe a tiny wick, but I don't even think it's going to get down that far, the price should be venturing back outside this level. Because if that was a spring and this is the confirmation that it was to make this accumulation for upside, then for price to be out here on a weekly closing basis again, it will be an indication that the idea is wrong. But my logic is that whilst, yes, we have three volume spikes, one of these was kind of quite a bit higher than the uh, the two that came after it in terms of being part of that like narrower accumulation range. And there was a lot of fuckery that happened here. Um, in May, you'll recall on Twitter, I posted about observing that on Coinbase specifically, there was a lot of volume compared to other exchanges. And that I speculated that because Coinbase is the, what's the right word in crypto? Broker, dealer, whatever, facilitator of accumulation of institutional players who want to get into Bitcoin, most notably Saylor and Musk and Tesla. My observation was that there was so one of those players was exiting the market at that time. So this is that observation on May 12th, 2022. Turned out to only be Tesla getting out of the market here. They announced that in an SEC filing at the end of the quarter. Um, but the point I'm trying to make there is that this volume, I don't think it's fair to classify this as being part of that three push high volume moves into a low. Um, so another way to kind of rectify that is to potentially assume, and this could be what price is starting to move towards doing right now, there could be another high volume spike coming within this range. Now, naturally, the most immediately optimistic of those is that price is constrained within this area and that the volume comes in at this level, which would really indicate to me that this is what it looks like and that the final kind of move down to liquidate the late longs here and to trap shorts that will never be profitable would be to spike it down and accumulate off all of these stop losses, which, funnily enough, if you take this wider accumulation and this narrower accumulation and you get the midpoints of both, this box here, I'll just make it more green so that it's clear, is the midpoint of both of those accumulations. Interestingly, it's also where the stop losses that were trapped who are basically trapped long. It's where the stop losses to release those positions are. So by clearing here, this level, you trigger a lot of long stop losses such that you force them to sell their positions to you in this area. And I think if we get that, we get that third volume spike. Um, you never want to say phrases like "it would remove all doubt," but it would certainly indicate to me that this accumulation is real, and that the liquidity in these areas might be hunted. So, assuming that does play out, obviously the longer version is that this extends kind of to be more symmetrical with this side of the accumulation, but more often than not, they do cut this symmetry of it short and end up kind of finishing off the accumulation kind of closer to what would be a symmetrical point. So I'm favoring the shorter one, which would be this month, next month, before starting to move price back up to actually break out of this area. Because we see that, like, yeah, all the bullish news. Firstly, look at the net sell volume spike on this candle. It basically, everything that they accumulated in this area, give or take, was disposed of in this candle. But Ombre Capital, price was going up. How can they net sell? I know. That's what the market maker does. Price is going up, retailer buying because they see big green candle. Granted, I have it turned off because I don't really think the colors are important. But big green candle was actually market maker net selling into his average cost basis as well. Uh, so where does the liquidity come from, and why these levels? Well, simply they're untested volume areas from the move down. And market maker knows there's money here because he was able to commit it at all of these junctures. Therefore, he knows he can commit it again. However, an alternative scenario for lows is obviously bleeding out and creating a kind of a diagonal lower structure, which would be three pushes. I don't think that's going to happen. I don't think we need to go below this level. But if we do, it doesn't invalidate the markup case. It just will obviously prolong the structure. So this is what we would like to see in the immediate, and what we will be reacting if we do see with accumulations of Bitcoin and related assets to take advantage of this markup phase, which I believe is coming. And it's consistent with my the ideas that I've been sharing in previous videos and indeed on Twitter. So why these levels? It's because they represent, as I just said, untouched liquidity within key volume areas that have previously been created and have committed retail liquidity. My target is 50, so just taking out this liquidity area. But there's also a lot of liquidity as high as 60 to 62K um, for one real reason. And that was because around October 2021, as the stop hunt of the high was being put in, the April 21 high, that is, this is when the BITO, the BITO ProShares ETF went live, requiring Bitcoin asset managers on the CME to accumulate enormous amounts of Bitcoin in order to facilitate that. So they were forced to buy Bitcoin at the 60 to 62K area. So I'm not saying it's a sure thing, but it is a possibility for a blow off in order to basically just touch base on the Bitcoin that they were forced to take on at these high levels before price went down. So that's the video for now. I wanted to outline that price moves incredibly slowly and show you that the idea that you think you're having in this moment is probably not going to be the idea that makes the structure of the market that you're looking at. That you should observe. You should have many systems working in tandem. This is just one aspect pointing to accumulation. This is another aspect pointing to accumulation. There are many. All of these charts are telling me different things. It's not all of them I share outwardly, but there's a different system in each of these charts. But for now, suffice it to say, it looks good for the accumulation, and we'll now turn to kind of watching sentiment and seeing how, firstly, price reacts around the areas that we believe it will react, and also what the sentiment is like from retail participants at that time. Ideally, you want to see price going down, high volume, retail fear. That would confirm to me that what I'm looking at is a true reflection of the external reality of the market. And then it will just be about trade management, getting in and getting out to take advantage of this macro move, which I believe is going to go to at least 50 to take this liquidity, potentially higher for the CME reasons and just because it would be the perfect scam. And then we take it from there. We watch them distribute into the end of the year if this shorter term accumulation plays out, and we do the same thing again, because in reality, price is the same upside down as it is the right way around. There's no difference in this structure and this structure. They are the same. The dynamics that the market maker uses to establish these price moves are the same, and the tricks and deceptions that they play, both advertently and inadvertently, on the retail participant are the same, just inverted. So this is Onbrain Capital signing off. Hope you enjoyed the video, and chat to you in the next one.